South Florida multifamilies just took a $35,000 hit in only 1 month. Inventory is piling up, days on market are spiking, and sellers are losing leverage fast. This isn't just a slowdown, this is a full-blown buyer market shift. What's up, everybody? Jake Fletcher here, your Greater Miami and Broward real estate agent, and today we're diving into the latest numbers for duplexes, triplexes, and fourplexes across the Tri-County area. That's Miami-Dade, Broward, and Palm Beach counties. So we're looking at residential multifamilies, people. We're looking at income generating real estate investments. So if you like that, smash that like button today. And whether you're an investor, a first-time buyer who's looking to get into your first investment, or you're just watching the market, I've got the data that matters straight from the MLS. This is straight from the source, guys. And you can always book a strategy call with me using the link down there in the description below. And all my personal contact info is down there as well, so you can reach out to me directly. So let's go ahead and start things off with demanda. So there were 108 multifamily sales. We're looking at the green line there. 108 multifamily sales across the Tri-County area in August of 2025. It's a small gain from July, but we're still down 9.2% year over year as far as sales go, okay? So that's a pretty big drop year over year as far as sales. Not as big of a drop as we see in residential, single family homes and condos across Miami-Dade and Broward. But, still for income properties, because this is such a hot area to invest in, it's pretty low amount of sales. You can see looking across the green line, it's on the lower end of what we historically see, okay? Now, on the seller side of things, we saw the closed price to original price ratio drop to 93.3%. That's the blue line there. What's the closed price to original price ratio? Well, it's just taking an average across the market of how far from the original list price did a seller have to go down in order to actually sell the property, okay? So if it was listed for $1 million and it sold for $920,000, that's a 92% close price to original price ratio. Hopefully that makes sense. If it doesn't, drop a comment down below. Feel free to, flame me in the comments, guys. I'm not afraid of it, okay? Now, like I said, 93.3%, slightly down from 93.7% last month, but it's actually up from 91.9% this time last year. So overall, sellers are still giving concessions, but they're doing slightly better than they were in 2024, at least at this time, okay? Overall, kind of looks like it's going back and forth and back and forth and back and forth. There's good months and there's bad months. And also, too, a lot of it is, if we're being completely transparent here, a lot of it has to do with what properties sold during that time. So the population of the statistic that is drawing from is very important, because if it was a bunch of overpriced properties that they had to reduce a lot versus another month when they were properties that were closer to market value or closer to what a buyer would pay, then you'll see some fluctuations there. But overall, we're getting discounts. If you look at this year and last year compared to the year before and the year before that in 2022, we're definitely in negotiation territory. The very least we can say that. Okay, so let's look at next. Inventory, number of active listings in the green line, months of inventory in the blue line. So inventory continues to grow. We actually see active listings this past month hit 1,293. It's up 1.5% month over month and up over 16% year over year, okay? So we've had a big inventory spike over the last year, even though we've come slightly down, from around the beginning of this year. And really at the end of last year, the end of January or end of 2024, look at this huge inventory spike that happened in multifamily properties at the end of last year. And then we saw them taper off a bit. And then, like I said, 1.5% up month over month. Okay. So moral of the story, a lot of inventory out there right now, okay? Now, we actually held at 12 months of inventory in the blue line here, which, has happened now for 3 months in a row. We've been at 12 months of inventory. So, the trend line is overall creeping upwards, but the last 3 months have been stable at least, okay? Compare that, however, to 9 months of inventory last August over here, and it's clear that buying power is on the demand side, okay? So, meaning that it's taking longer for properties to sell. There's way more inventory. We're not seeing sales keep up with inventory, and therefore buyers have the leverage right now. Buyers are getting what they want in this market if you're smart and you're working with a fantastically amazing real estate agent like myself, if I don't say so myself. Next up, let's take a look at number of expired listings in the green line, and then number of new listings in the blue line. This is also a graph that really represents market churn, okay? What's coming on the market versus what's leaving the market because it didn't sell, okay? Now, new listings rose to 279 right here in the blue line. You can see it went up just a little bit. And it was actually, it's not actually a pretty decent amount, 7.7% increase from July. Okay, it's a pretty decent amount of new listings, which is actually pretty different than what we're seeing in residential, single family and condos, because we're seeing less inventory in those verticals. And here in residential multifamilies, we're seeing more new listings, okay? So that's pretty interesting. And we actually are up 12% year over year. So if you go back over here and, this would be August of 2024 right there. And we're up actually 12% since then, okay? So more owners are jumping into the market, whether it's to cash out, cut their losses, or reposition their funds into another investment, or something along those lines. But not everybody is getting it done. Okay, let's look at the expired listings right here, and we see they're climbing. Okay, expired listings, to say the least, they jumped up 16.5% month over month. Okay, up 303. Extra expired listings, okay? That's a pretty big spike, guys, for 1 month, 16.5%, okay? And while it's only a 3.1% increase year over year, if we compare it over here, it's definitely a sign that properties are starting to sit on the market longer and then, not selling, okay? We're as far as right now, okay? Versus like the beginning of this year, we had way less expired listings and, more new listings on the market as well. And now we're seeing way less new listings, even though we did have a pop this last month, a couple months actually. We are also seeing way more expired listings since about April, May of this year. Okay, so it's things are sitting on the market. Now, speaking of sitting on the market, average days on market just hit 94, up 10 days from 84 last month, and up 11.9% month over month. So looking at that green line, we see a big old tick up right there. That's that 11.9% month over month, okay? And properties are sitting. Like we said, they're starting to sit more and more and more. That's why we see more expired listings. That's why, we're seeing more days on market and all of that, okay? Sellers are waiting longer for offers, especially on properties that need work or aren't priced aggressively, okay? People are still paying, and not necessarily a premium, but they're still more interested in properties that are turnkey right now. Pretty much everybody that I'm working with who's looking at residential multifamilies right now, they're all looking for turnkey properties or properties that need very little work, okay? So if you're selling or trying to sell a residential multifamily property that needs a lot of work, you better make sure that thing is priced aggressively, okay? Now, if it's like turnkey, what I like to call HGTV certified, meaning that just bring your toothbrush and you're good to go, then you can definitely be a little more optimistically priced, but you don't want to be priced over the market value, okay? It's still super important to work with somebody like myself who is a expert at running a comparable market analysis to determine the exact market value of a property, guys. Zillow's estimates are not real. They are completely fake. The owner of Zillow, or the guy who, whatever, the CEO of Zillow, his property sold for like $1 million less than the Zestimate. Feel free to Google that and check my numbers, but I know it was way less. It was at least $1 million less than his Zestimate, okay? Dude, you know, it was like a $15 million house. But nonetheless, Zestimates are not real, okay, guys? You have to work with an expert who knows how to do a comparable market analysis to derive the right market value for your property, unless you're an expert yourself, in which case, have at it, Haas. But, you know, point being that you need to be priced correctly, okay? And on the topic of price, median sale price, that's our blue line here, went down just a little bit, dropped from, not a little bit, it dropped from 707,500 in July to 672,500 in August. And that is actually a 4.9% drop in just 1 month, okay? You know, sometimes like people say like an average appreciation of real estate is about 4% per year. So to see an almost 5% drop in just 1 month, definitely, in my opinion, spells a little bit of trouble for sellers in the residential multifamily market, okay? But year over year, we're actually still up slightly from 665,000, okay? So, you know, it's about $7,500 higher. So it's not all bad news, but, you know, the monthly swing is still pretty telling, and it could be a foreboding canary in the proverbial coal mine of what is going to be coming in the future. And as you can kind of see, you know, we pretty much have always trended up. But if we followed this trend line, y'all, if we just followed that trend line up and continued to go up, we'd expect prices to be closer to like 750, almost 800 now. And the fact that we're in the mid sixes, 665, you know, tells me that, you know, we've seen over the last year and a half, prices starting to flatten out, and then even maybe starting of a trend line. If we did like Fibonacci numbers here or something, which I'm not like a Fibonacci guy, but you know, if you did it, it looks to me like we're starting to see the beginning of a downward trend in terms of prices. Now, why does that happen? Because investors, except for in Miami-Dade, apparently a lot of times, but investors don't buy investment properties to just break even. And they certainly don't buy investment properties to lose money. Investors buy investment properties to make money, okay? Now, when valuations get too high, when acquisition prices are too high and rent prices haven't followed, okay, and not to mention the cost of doing business gets higher, property taxes definitely aren't getting lower, insurance has been spiking like crazy, you know, the cost of everything has gotten higher, you know, in terms of maintenance and materials and things like that. If you have to buy a new, you know, refrigerator or whatever it might be for your unit, the cost of everything has gone up, okay? So in order to be profitable in your pursuit of a residential multifamily investment right now, the acquisition prices have to meet the market demand, okay? And the market demand, like I said, isn't there to just break even or lose money, even though you will sometimes see that in Miami-Dade. People just sort of park their money in an investment just to break even, and you wonder, like, sometimes, like, how are people paying these prices? But suffice it to say, you know, couldn't be me, okay? And couldn't be one of my clients, because I wouldn't let you do that to yourself. But some people, apparently, I've seen a lot of, like, you know, people who are just getting like 2-3% cap rates, and some of them looking like I don't even know if they're making money on it. But right now, I have been seeing a lot of like 5% to 6% cap rates on the good side. Sometimes you can find a 7% cap rate. You know, if it's a property that is in good shape, just needs a little cosmetic work, but it's under rent value, then you can use the fact that those units are under rent value to negotiate down the price. And then if they're on month-to-month leases, then get them up to market values and be able to, you know, get a better cap rate than what is in place at the current moment, okay? Now, I'm trying not to get too technical in this video for people who are new to this, but no matter where you're at in this, in your process, here are the takeaways, okay? Multifamilies in the Tri-County area, they're still holding value year over year, okay? But the monthly numbers show a softening market, and it could portend to more softening in the future. You know, we're seeing more inventory, more expired listings, longer time on market. These are all signs that the market is softening. So if you're looking to invest, if you're looking to house hack, meaning live in one unit and rent out the rest, or, move into a multi-unit property and, maybe have your family live in the other units, whatever it is, this data is exactly why timing matters, okay? So let's build you a smart plan. I want you to be able to take advantage of my knowledge, take advantage of my brain, and, build a plan for yourself and be the most educated consumer out there so that you can make the best plan for yourself and for your family. And that's what I want for you guys, okay? So hit that description down below, Calendly down there, all my personal contact information, reach out to me. If you enjoyed this video, I would love for you to smash that like button, hit the subscribe button, ring the bell, and that lets me know that I'm doing a good job, and I appreciate it. So thank you for making it to the end of this video, and it's my pleasure, guys. So let me know what you think down in the comments. What do you think is going to happen in the market? Do you think that multifamilies are in for a big correction like we're seeing in the condo market, especially, and other verticals, especially condos and townhomes in Miami, Broward? But do you think we're in for more tough times, or do you think rates are going to get cut like crazy and come in and save the day? What do you guys think is going to happen? Let me know in the comments down below. Jake Fletcher here with the Fletcher Group at eXp Realty, your Greater Miami and Broward real estate agent. I'll see you on the next one. Peace.